U.S. stocks staged their first notable rally of 2023 to close the week higher Friday after wage growth decelerated last month. It appears that investors perceive the deceleration as a sign the Federal Reserve officials may ease their rate hike campaign. I'm not convinced because there are still over 1.8 unfilled jobs for every unemployed person. So in my opinion, investors should expect the Fed to go higher and longer. Last year, the Fed battled the markets. The Fed wanted equities to go down. The Fed wanted bonds to go down. The Fed wanted housing prices to go down. And at the end of the year, the Fed got much of what they wanted. This year, the Fed will battle employers. It wants higher unemployment. This is not only a battle, it's a war because it will be much more difficult and will be the end game. Only after employers fire 2 million workers will the Fed win the war. For us as investors, we win if we can just be patient and wait for the opportunities. And now back to the salt mine with the 2-year weekly chart on the VIX, the volatility index. As you can see here in the upper left, the symbol is $VIX using stockcharts.com. Now, this is a salt mine simply because we got to keep coming back to this. It's hard work and patience, but opportunities will come. Now, this dish moves on down here, bottom and basing, and we're moving on up. But as you can see, in the last, say, month and a half, we've kind of trundled sideways. Not much movement up or down. And I think you see that in the stock market as well. Not much progress or degress. So, what we're waiting for is a move of the VIX on up. I think it's starting to gain some steam here. You see that the MAC is below the zero line. Both the fast line and the slow line are below the zero line. So it is weakening, has been weakening since here in early 2022, moving on down. But even though it's weak, it can be dangerous if that fast line comes up and through the slow line and then up above that zero line to head on up. But right now it's going sideways, and I think the stock market's going to continue sideways with maybe a little bit of stock market upside, and that would mean some downside for the VIX. And here in the top portion of the chart, you see the RSI also kind of trundling sideways. Not a lot of conviction one way or the other. My sense is that it's going to gather some steam, the VIX, and then head on up. I think it wants to go back up here to this 34 or 35 mark to see if we can break up on the way through. If so, the stock market is going to head down in a serious way. But if the VIX breaks down, then the stock market will head on up in a serious way. All right, let's now go to our charts. Sticking with the 2-year weekly theme on our charts, and that is simply because the weekly chart seems to be the easiest chart to read at this time. I think the weekly is in control for the most part. Now, we've been watching this channel. Let's head on down here with the bottom channel line like that, and then the top channel line moving through like that as well. So we headed on up, we got reflected down, but we have a little bit of a bottom and basing here, and I think it wants to try to head on up through the 20 EMA and maybe to that top channel line, as it did, say, in this bottom and basing, and then move to this point here. It got reflected back from that 50 EMA. It didn't even make it to the trend line. We may get a little bit closer here this time, so just watch that. I think we're going to get reflected back, but that's just my guesstimate at this time. I think that's the probability. I think we're going to head back on down, and that's where I want to see whether we do a head and shoulders, with that being the right shoulder, this being the head, and then the left shoulder. But only time will tell. But that's the setup I'm looking for. If it doesn't set up here with this shoulder and continues on down, then we have a lot more work to do. Moving down here into the oscillators, we're just going to pass volume relatively quickly, with the exception that this is a fairly steep decline. You want a little bit more green here if you want a strong upside. It's kind of weak. Moving here into the MAC, you can see that weakness here. It occurred in this reflection and then move on up, but I don't think that has a lot of power to it. Simply because you can take a look here at the histogram, you can see that things are weakening relatively quickly here. Moving on down into the price rate of change, a nice little sawtooth up and above that zero line, but I think this is going to probably turn back in a relatively short time period, but we'll have to wait and see on that. Now into the RSI, it's at a moderate 49.58, so not much conviction here, though we do have a little bit longer term move on up, and so it is strengthening, but we're still below that 50-year midline. It is going to break up and through that. It just depends upon how much further we go. I don't think it's going to go a lot further. That's just my sense. Here, the same thing in stochastics. This is what I call a backside spike after a top here. We had this top here and then a backside spike at this point. This is going to be a little bit different, but as you can see from these tops right now, it's declining, so it's weakening. The same thing here in the Williams, from this top to this top, it's weakening. So we're going to get this move on up in the Williams. That may carry it. I'm not sure if we're going to get to that negative 20 or overbought territory. We'll have to wait and see. It's possible, but it doesn't really matter. Let's go on up here back to the chart. This really is what matters to everybody for the most part. If we get up through this trend line, then perhaps things are going to change. But we need to do that, and convincingly. Right now, it doesn't look like it has the conviction or the strength to do it. So I am looking the probability for a reflection back, and then the market heads back down here, but that's going to take a little bit of time. In the meantime, look for those opportunities. They're out there. And for today, that's ChewDog Charts. Thank you.